get into it. This is not financial advice or any crap like that. It's just how I'm seeing the market. Had an interesting day today still, really. After the last video, Bitcoin decided to do what we told it and dropped like a stone. So there's some interesting levels to look at today. First of all, BTC longs is still dropping off slightly. I think these are probably mostly liquidations from the people that have gone long in this area here. Don't think it's any huge concern. I think a lot of these people are going to be holding for a while yet, based on what they've done in the past. So this is a fairly important chart for us here. So this is Bitcoin on the daily. This is on Bybit, obviously. Actually, I'll see. Got all my fibs on this one as well, but go back to the Bybit one, I think. So basically, yeah, I didn't expect it to drop that quickly. I thought we might at least bounce off the 20 EMA, and then the fact that we just went straight through the 50 EMA. We have cleaned up a lot of the liquidity that would have been just below these levels. We haven't necessarily come in under here yet though, and I'd be surprised if we leave a wick like that on the daily before going back up. In general, if we close around here, it looks like we're probably making a new sort of lower low. At least we are on the way down on this anyway, on this little section. So pretty much we are now in a proper downtrend. Obviously, closing above the most traded level is interesting. Closing above the 50 EMA is also interesting. And the fact that we nearly hit that bottom moving average on the pi cycle indicator, that's sort of going to be a key level for us if we do come back down there. As you can see, it has wicked below that before, but if we really want to maintain this uptrend, you would expect us to stay above that level. Once we get below that, we tend to stay below it for a little bit, which I wouldn't hate, to be honest with you. So that stayed below that for 60 days, 2 months last time. So that's going to be a fairly critical level, I would think. And again, once we sort of got below it here, didn't stay below it for quite as long, but yeah, we'd be looking at that, the 200 EMA on the daily as being a key level if we do break below it. Okay, which is quite a way below us at the moment, 56, 57k. But yeah, there'll be steps on the way down if we do go down that far. The way the general economy is shaping up, and we potentially will, I'd be expecting sort of, little sideways and bounces along the way from these key moving averages and gas in channels and stuff like that. So, and potentially down into the 200 EMA, which would be a fairly good level. These two levels here would be interesting for a bounce. I don't know that we'll get much below that. If we break below these wicks here, then there's going to be something majorly wrong with the economy, in which case you're expecting to to go pretty quickly down into this sort of 43 region, which again I wouldn't hate that, but yeah, your 800 is probably going to be coming up there by the time we get down to that level, I would think. So they're just key things to look out for on the way. I'm going to hold some cash in reserve just for some DCAing in my longer term accounts. I'll probably look at the bottom of this Gaussian channel, to be honest. I'm still not 100% certain we're going to have a massive dip. But yeah, I'll probably DCA a little bit in there and wait, see if we get down to this 200 EMA, a little bit more, and then probably this level in here. If we do completely shit the bed, probably be a pretty good level to buy in at. And then I'll probably wait for a confirmed turnaround to actually put the rest in, I'd say. So they're the key macro levels at the moment on Bitcoin. Just point out here that we are still disconnected between global liquidity is still trending down versus the S&P 500 is still sort of trending up. That isn't a good sign. I did see someone reported, I think it was Game and Trades reported last night, that retail or dumb money's still buying in at quite high levels, whereas I've seen other things for CTAs and stuff like that where they're not involved really in the current run. They have upticked a little bit on a few different assets, but they're nowhere near the levels they were at when we were actually on the recent pump. So this run here was very different, and even this run here was very different with CTAs. They all sort of started selling around this level here once we got to that new all-time high. CTAs are commodity trade advisors for anyone who's interested. And again, we have had a little update on the S&P 500, but it's still not supported by consumers. Qs, it's not looking super strong, bouncing off the top of that. Gaussian channel's interesting. Equal weight is still down, and again, this is sort of one of the issues that I'm seeing. If we get a breakout on equal weight, then yeah, let's go bullish into the election. At the moment, it's kind of sideways, and the run-ups on the S&P 500 and things like that seem to be just covering 0-day expiry options. Still not huge volumes, and yeah, the indication is that retail's the main one driving this run, which tends to not end very well, because Wall Street likes taking their money. Nvidia's actually slightly down. I can't believe that wick. That's ridiculous. They've done their stock split as well, which is interesting. Typically I saw some stats on FX Evolution. He had a video yesterday where he talks about stock splits for these guys and what it tends to do for the overall market. One stock split by itself tends to be reasonably bullish. Two reasonably close together is not bullish. So watch out if they announce another stock split. NASDAQ, again, it's made a new all-time high. There's one interesting statistic about the market too. If you buy every time the stock market makes a new high, statistically you actually do better than buying it any other day in the stock market, apparently. So that's a fun fact for you. But just keep in mind that's over certain time frames, not necessarily if you're buying one day and trying to make money the next day. Maybe if you're holding it for 10 years, you're okay. All right, so XLI Industrials is interesting. It's pretty flat, which is kind of agreeing with that the economy's not super healthy. T? No, yeah, Dow Jones Transportation. So this is a key economic indicator as well. When your transportation index is down, typically your economy's not doing great, because obviously transport is what we use to send all the goods around. Just see where it was at. That was COVID drop there. Yeah. So it's pretty flat. And I'll just do DJI versus gold. So yeah, that's a little bit of a recovery versus gold there, but nothing to really write home about. As long as we're below that 50 moving average, I'm not super excited by that. If that does start to pick up, then it would suggest there's a little bit of a recovery happening, but yeah, it's nothing. No clear signal there. In junk bonds, high yield bonds, sorry, are still flat. This is a ridiculous channel. Like 179 days, half a year, we've been sitting basically flat on bonds. If we get a breakout either way, it's going to be pretty good breakout, I would think. Anyway, it's not really showing us much either. TLT has bumped a little bit. Again, still in a sort of ticking towards uptrending, which is good. Good for my long-term portfolio anyway. Yeah, bonds in general still flat. Skew, interestingly, it has come back up, so it's suggesting a bit of support for the current rally. So that's interesting. Copper is down still. Just retested that 50 moving average. I think we'd probably go sideways here for a bit. I'd be surprised if it didn't try and capture a bit more liquidity in this region, just given there was a bit of trading there in the past. So yeah, it's a most traded zone in that region. So I expect a bit more sideways. Looks like the S&P and the Nasdaq are probably just going to grind up for a little bit, try and suck in some more retail. Everything else is kind of looking down. Gold's not particularly strong. It's a bit range bound at the moment. I think if it breaks below this level here, I'm actually going to put an alert on that. Oops. Crossing the horizontal line. that'll be an interesting level. It's not looking super strong. Gold generally will come down. If the overall market comes down, gold will tend to come down, at least to start with, but then it quite often will lead out of a major correction. Or if things are completely shitting the bed, it'll pick up while the rest of the market's dumping. So you've got to be careful. Don't just assume gold's going to go up when everything else comes down. Yeah, nothing much else going on here. Money supply is still up. Yield curve is still flat. Be looking for that to break out to the downside. And yeah, percent of stocks above the 50-day average is still, I guess, downtrending. I'll be looking for that to turn around to really show sort of breadth and general strength in the market. So if this follows with an uptrend in the market, then it's kind of another confirmation that, yeah, we might be in for a longer bull run. It's not super convincing at the moment. Oil's still heading up. I would expect it to find some resistance here. You're probably going to be looking at, Jesus, Hunt Bowden on Sol. Fuck's sake. I think that's my first spammer. Oh yeah. I would expect oil to sort of come in, probably not that low actually, probably off about this level here and then back up. That would be a healthy sign that oil is going back up. Not that many people want that, but yeah, you'd be expecting it to sort of do a bit of a move up like that. I wouldn't think it's going to go straight through these moving averages, given they've provided a bit of resistance in the past. So the big 6 is up again. It's mainly the big guys that are supporting this market. Yeah. Not a generally strong market. And then if we go into the altcoins, they're all obviously struggling. This is no man's land, really. Very rare would you see a turnaround in between moving averages, like that far in between moving averages. I'll just change this to 100. See where the 100's sitting at. See, we've even broken below the 100. So probably a little bit of bounce up today or a flush. So I'm still running with the theory that we'll get a bit of a flush into the FOMC meeting tomorrow. We've got CPI, FOMC. It would make sense for a bit of a flush into that and then a bounce up. If they're both negative in the market's eyes, then we could just keep flushing. So it's a tricky situation at the moment. Technically, this is downtrend. You'd be looking for the 128 mark on Sol at least. I'd kind of be looking more for it to clean up these wicks as well, down to sort of that 112 region. Yeah. The chances of us getting a more major correction right now, and then the Fed stepping in, and then we get the run up into the election, sort of increasing by the day in my eyes. It's just, there's some technical levels where you would say, okay, it may pump still, like it may hit these levels and bounce. time to be cautious and just look for the turnarounds on the lower time frames. And on that, we can just go into the lower time frames. Actually, we'll use this one for the 4 hour. No, we won't. Where's my 4 hour chart there? So this is still postured to the downside on the 4 hours, using CCs, indicators. Sort of agreeing that, yeah, maybe bounces are going to be met with selling demand for the time being. You'd want to sort of flip this moving average here. I think that's the super trend one that he uses. You'd want it to flip that and then push through these other moving averages for us to start thinking bullish again. Oops. We'll use this for the 1 hour as well. So the 1 hour is pretty similar. Certainly no signs of a turnaround yet. On the 15 minute, there is a little bit of a chance that we'll get a turnaround here. Where's a decent 15-minute chart? What's that? That's 15 minute. All right. So this is actually the bot we've got running at the moment. It's gotten back above the 50 EMA and it's just retested that. If we break below the 50 on the 15 minute again, then probably more downside, but this is sort of a sign. Generally what you're looking for here, you've got a little W formation here. I'd be looking, I've got the magnet on. So I'd be looking for sort of a retest of this level here. If we come back down and bounce off that level, that's kind of a confirmation, particularly if we break back through the 50 again, that'd be a confirmation that I would expect it to come back up into these sort of levels here, particularly up into the 800 EMA. And that could happen relatively quickly. We could actually get that in the next day or so and then bounce back down off that. So this is a very high sort of potential move, and then what happens around here will be interesting. Might depend on the market overall. So I think they're the key levels to look out for. Yeah, I hope that's useful for you guys. That's at least what I'm looking out for.